All right. Good morning, everybody. So we mostly have um, these broader economic data points today. They're not so focused. We do have some job numbers, but these aren't the ones that we really need to watch for. It is going to be a busy day. We have a lot of Fed speakers. And we even have Yellen out chipping teeth again. So they're still anticipating a Fed rate cut by the end of the year. A couple of them from the way things are looking right now. There are the spot gamma levels for today. All right, so we're still inside day in crude. We haven't really resolved anything. We managed to come back up inside the box, but that's it, really. We haven't really gotten anything else out of it. Nice recovery in Asia from an inside day breakout to the downside, but that's all it managed to do is recover and get back to where it started. Really nice follow through in Europe so far. I mean, it's 12:30, but that's looking really good. We're right up into a major resistance though, so really looking to see if it's going to follow through or not. Usually on the market wrap for Europe, it'll kind of give us an idea of what names are running or what sector, what industry, and they really didn't do that. All right, so a lot of auctions, 11:30. By the time we get onto the other side of lunch, other than anybody who might be speaking this afternoon, you don't have any econ to worry about. So the 0 day should be okay, other than Fed speakers. So that's going to be your biggest concern, right? After you get past the auctions. So I mentioned yesterday was setting up for a potential trend day. And I laid out the criteria for what a trend day would be, right? Because there's different ones. We needed to have gapped up. And then when we get into the morning session, we maintain that gap and we travel farther away, making the gap wider, and then we close in the upper part of the day. And that's what we did yesterday. But I gotta admit, that was one of the sorriest, trashiest, worthless trend days that I've seen in a long time. It did finally get to where it was supposed to go, and it did maintain the pivot point set at that 40.31 from the Globex. But what a worthless, sorry excuse for a trend day. Volume's in line, everything is normal. So we again have an MDP that's 2 in a row. If you've checked out the missed daily pivot material, you'll know that having one MDP is pretty cool. It's something that only happens, you know, like 20% of the time, but to have 2 back to back covers even more weight. We are continuing to expand beyond the weekly pivot point as well. And as long as we're maintaining above that weekly pivot point, we, you know, maintain our bullish bias across the markets. $41.34 is the weekly, or is the daily ADR. So ADR half 40.96, full ADR is 41.34. And we're already up a 0.5% this morning with the ADR sitting at 1.9%. I'm just rounding a little. So we could easily hit that. The critical levels that I talked about yesterday are still in effect. That 40.53 we're done with, and that 40.40, but we still have 40.85. We did manage to resolve that 50 period moving average from the daily also. Right now it's sitting at 40.33. And that was the last thing that was in our way, right? We don't have anything else. So we're still in the box. We're still in a box. Since we've broken out of the box that we had been in, look for a little bit of a Busby, right? The old resistance becomes new support. So a pullback into, say, 40.70, maybe into the 40.60s. 10-day, 30-minute volume profile. We reached the top of the profile and have expanded beyond it. When we're at the bottom, we expect to go to the top. When we're at the top, we expect to go to the bottom. The point of control between the volume profile and the point of control on the TPO are no longer lined up. We've expanded completely outside of the value area high and have set a new level. It's pretty obvious. There's nothing really up there yet. So if we do start to fall back down, I wouldn't look for any sort of first touch bounce plays or any support or help or assistance. Through the day today, we're going to lose Thursday's volume, but we're still going to have Monday here. So the bottom of this profile won't rise up until sometime next week. So the only thing that we could do is expand the profile more if we continue to go up, or if it comes all the way back down, breaks down and expands lower, which, that's not the expectation. But none of this will drop off, right? We'll lose today's, but Monday's is still there. Mapping out the 5x5, we have now again a new VPOC from yesterday. It's not rare like, some mythical unicorn, but it's a little uncommon to have so many VPOCs stacked on top of each other like that. We are 1.5% away from the 10-day moving average, which isn't that bad. We're getting slightly overbought, not into a critical level where we expect it's going to flip over and come back at us, or not even at a critical level where we would expect it to pause and wait for price to get caught up. It's just slightly extended, mildly overbought. And it wouldn't take very much for the 10 to get caught up, right? One sideways day, say Friday, where nobody really wants to carry anything into the weekend and we just kind of hold the line. We are at the end of the month. It's something to think about. A lot of analysts are waiting to see how this monthly candle closes, because candle close is what makes a candle valid. The weekly expected move on the top side is 40.89. And we're going to close inside of that box 80% of the time. And there's periods where we'll do better than that. We'll do 90%. But then there's periods where we're hitting like 30%, where they're really getting it wrong and we're breaking out of it constantly, which is sometimes a warning. Before COVID hit, if you guys can remember back to, say, late January going into early February, and we were sitting at all-time record highs in the marketplace right before the COVID crash. The weekly expected move had begun breaking out of the top of, or out of the price had been breaking out of that weekly expected move, and its accuracy dropped from 80% to less than 40%. And then it dumped. The whole market system went down. Now, there was warnings, other warnings besides that, like VVIX and skew, and there were other things. But one thing that really stood out was how much the market makers were getting it wrong, how much volatility we were having at all-time highs, when normally, when you're in a good bullish market, you get small days, small moves, small price action from one candle close to the next, which is how we define volatility, right? Volatility is movement. The movement that we're measuring is from one daily close to the next. And when that distance is really small, we say volatility is low. So if volatility was so low, why was price breaking out of its weekly expected move way more than it should have right before the dump? So it can be a huge heads up that's maybe something ain't right. If you count back 10 weeks, you can use that for a percentage. It's not like a great number of occurrences, but who wants to sit there and count a year's worth of these weeks? In the last 10 weeks, how many times have we closed outside of that box? It should be no more than 2, maybe 3. That would give you your 70 to 80%. Anything more than that says the market makers are getting it wrong consistently and that there's underlying volatility. So we're coming up into that level today. Just like last week, we can wick out of it and then come back into it. So nothing says that we can't leave the box. It just says that we're supposed to close inside the box by the end of the week. Here's another example where we actually had closed outside of the box on Thursday, and yet by Friday, we were back in the box to finish the week. That one actually finished right on the line. That one just barely outside the line. I thought we had a gap to close, but it's already closed. It was closed by 1 tick. If we measure this wedge, 50% of the wedge projected to the upside puts us right at the top of this pivot point. Kind of lines up with the idea that we're going to have some issues if we were to get to 4,200. If you would go through like Spot Gamma's founders notes or that tier 1 alpha email, they talk about the round numbers and the half numbers, 4,100, 4,150, 4,200. These are critical levels. They're going to have a lot of gamma. Their volatility levels, 0 gammas, a lot of points. Watch for some shenanigans, maybe not today, although I think it's possible today, but more tomorrow, right? We got 1 day left. It'll be the end of the month. It'll be the end of the week. I keep looking for a setup like an evening star reversal or an island or something like that. And on the ES, since we're open all night, there doesn't really show that gap, right? Like right now, the candle that you see, that is a gap because we closed here, and in the RTH when we open, we're going to be opening way up here. So if we were looking at this with no Globex on it at all, the gap would be a lot more obvious, which is why using the SPX kind of helps with that because it doesn't trade at night and the gap is always there. $40.80 in the SPX is the level we really want to keep our eye on today. We closed last night at 40.30 basically. And we got the top of last week to deal with, 40.39. Basically 40.40. It's going to be a significant level to get through. And if we can get through that, then we're going to deal with that 40.80. But right now, we don't have any short setup or pattern or anything that would imply that this isn't, that this is somehow slowing down or coming into a resistance or anything like that. There's nothing. So while it's choppy and there's a lot of big gaps, there's still nothing showing that it's done yet. So watch for a rejection at that 40.40 today. Considering where the ES is at right now, unless we fade back before the open, the SPX should open above that 40.40 level. And if that's the case, we want to see that it's going to prove to be support. So we get the open, maybe we fade back down, test against that support, and then make a run for that 40.80. But recognize yesterday, bullish Marbozu, no wick, even the one across the top, that tiny little bit up there, it doesn't even count. So this thing made no attempt to close the gap yesterday at all, none. And here's an example of a day where we gapped up. We made a minor attempt to close the gap. We closed in the upper portion of the day. And the next day, we rallied even more. And then we closed that gap plus some. Now, I don't know that it's going to do this today. But after we get one of these big gap ups and we run solid all the way to the end of the day, one of those good, big, clean trend days, oftentimes it's a warning right before the flip. The XLF has an elevated sizzle this morning. It's the only one sitting at 500. So we got gold, semiconductors, Bitcoin, energy, And KWeb is down this morning. Let's dig into that a little bit, see what's up with KWeb. It can get whacked just by one name, so seeing KWeb down by itself, is only slightly concerning. Look at the gaps on that thing. All right, PDD's basically flat. JD, it's up, but coming back in. All right, Baba's down. Yeah, Baba and Baidu. So there's the reasons for KWeb being down this morning. It's not down very much. I would approach with caution if you're thinking of shorting it. Maybe let it get an inside day breakout. So below 96.28. And right now it's only down to 98.5. So, I mean, it is down, but it's still well within yesterday's range. And I wouldn't get bearish on it yet. Even that inside day breakout that I marked isn't even half of that weekly candle. And as long as it's holding at least that much, which would be 93.40, I wouldn't get all bared up on it. Now, for a short-term trade, say an intraday trade, you're just, looking to get in and get out. Yeah, sure, no big deal. Short it all you want. Now, Baidu, on the other hand, took a much bigger drop down this morning. It's at 153 already. Last week's candle wasn't, as big as the one on Baba. But I still wouldn't short this one either unless it can get 50% of this candle. So 151.94, which is all the way down here at this little doji. Call it 152 just for some easy numbers. You could day trade it down to that level, but I mean, I wouldn't try to short this sucker. Even though those were nice runs to the upside, I don't know that we're done with the China constituents. There's been some articles that have come out and said, that they the whole China reopening thing is basically done, and find something else. But it's hard to make that argument when you see things like Baidu pushing up against these highs. All right, so that's one of those groups that we've been watching. So the KWeb constituent, we just take them off the board, but that doesn't remove the rest. There's still Bitcoin as a liquidity and proxy, all the Bitcoin proxies, as long as that remains up. And then semiconductors and big tech like the FANGs. As long as those are up, we're still going to have this deep buying under the surface. It's going to make it hard to short the market. Right? It's hard to short this sucker when there's just so much under the surface buying. So SMH, using something like that to keep track of semiconductors, financials, KRE, XLF. Emerging markets is up this morning, which we normally lump that into the same group as those China ADRs, but that's not technically, what it's completely full of. It's got a lot of China stuff in it, but it's not all big tech in China. So we still got semiconductors doing really good. We still have finance. The finance has got the largest sizzle right now. And we have the big tech. So, it's hard to see any kind of short with that much under the surface. %36 of the NASDAQ is up 0.5% this morning. So it's not overly bullish. But look at the industries that are up. Lots of semiconductors. Packaged software, a little bit of internet retail. But what really stands out is those semiconductors. And for the S&P, 34% of the S&P is up this morning, 0.5%. Semiconductors do make a good part of that, but we're starting to get some rotational names: Walmart, Philip Morris, and then all those financials. And good old Netflix again. All right, so this is for the S&P 500, but I filtered it down to close to 100 names. Used market cap to do that. Speaking of market cap, that's the size of the boxes in relation to the other names around it. So we can see the monsters of tech easy. It's Amazon, Google, Microsoft, Apple, Nvidia, Tesla. If we're using the NY Fang, then we'd also add in Snow and AMD. So things really aren't looking, overly dramatic this morning. We're not crazy bullish, which oftentimes is better than being massively bullish. We're not seeing that rising tide lifting all boats kind of scenario, because we still see a lot of these sectors like health technology that are flat, really not putting anything out this morning. But the two main sectors that we have to have one of those two for a rally is financials or technology. When we can get both, that's a rally in the works right there. So as much as it might feel like the S&P is, really overextended this morning, and I mean, I'm looking at the hourly on the ES and the NASDAQ, and they sure look way overextended. This says they're not done yet. And their distance from 10 says they're not done yet. That they don't have to pull back. They're not overbought. They're not overextended. They're not due for a pause. They could just keep right on going. All right, so at least here it shows the pre-market price on the daily. It'd be this kind of an orange line. So we can see Apple's gapped up inside day breakout completely outside of yesterday's range, and it's still underneath these two big candle wicks. So this implies that there's still a lot of liquidity up here. Maybe a big seller that's not done selling yet. Until we can get all the way through that, we have to worry that it's still up there, right? Just like back here when we had that really big wick. We ran into it for 2 days trying to get through. And then finally, once the liquidity was done, then we made it through there. All right, same thing with Microsoft. Here in the pre-market 283.51, we're all the way above that level. Now it doesn't technically count until we get into the open. But we want to watch to see if this is going to take a rejection or not. All of these wicks back here. And going even from yesterday where we closed to gapping all the way up here. It's like we're jumping completely over all of this. And I used to use this phrase a lot. I don't use it as much now, but if we find a resistance during the day that we can't just seem to get through, what you'll find is in the after hours or in the pre-market, price will jump that resistance. It does it after hours. That might be what we're seeing here, but what I would be worried about with Microsoft is that all of that selling liquidity that's up here, let's say like a big buyer or a big seller in this case, still has large positions that they want to get rid of at that level, and they're not done yet. And now that we're up there this morning, as we come into the open, if that person starts selling, we're headed back down. Now, maybe they're done, and they're not there anymore, they could, move their spot that they want to sell at to a higher level. There's a lot of reasons that it might not dump, but I would be really mindful of where we're opening this morning. The Friday, March 17 wick, since we're above that now, use that for your line in the sand. If we break that, then it'll be a nice short. And the first target in that short will be the gap close at 280.5. If we happen to get through that, then it'll be the target will be the low of yesterday. If we get through that, it'll be the gap close, 275. One level at a time, right? All right, Amazon also opening gapped up this morning. It's above that 101 level, or I mean, it's really just right there. But again, big seller. This has been a dominant level that every time we've gotten up there, it just sold right back off again. So the fact that we're opening up there doesn't really mean too much yet, right? We got to actually get into the RTH. But there's another phrase I like to use. If we're going to turn, this is where that turn would happen. So, if we're headed to the downside, I would expect it to come from a rejection here. The main question at this point is, will it even attempt to test that 102 first, or is it just going to fade back down and close the gap at 135? Tesla's up a little bit, but it's not even an inside day breakout yet. It's still struggling to even accomplish that. Big wicks on each side showing from 186, a lot of buyers, and from say 198, a lot of sellers, and everything is just behind this green candle right here, Tuesday, March 21. Everything's behind that. Even if we've gone outside of it a little bit on each side, doesn't matter. That's your dominant candle. So it's still, as long as we're still inside that range, you really don't have a play for Tesla. You can day trade, sure, obviously, right? No problem. Talking about a good short or a nice swing long. We got to get out of this candle. So here in the pre-market, we're up slightly. That's a good start. Might want to see a little bit of a fade at the open to close the gap from where we closed the day yesterday, and then rerun, break out of the top, and deal with this liquidity, all these wicks across here. 200 is a big round number. The markets like round numbers. It'll gravitate to it. The point, though, is we got to get through it. I'm not overly bullish on this thing, but it's still, as long as it's staying inside of the range of that candle, it's not there's nothing else to do with it except just day trade it. And out of all of them that we looked at so far, Google's down. When we're talking about the pivot points and having rallied back up, this is higher than it closed this morning, but it's not breaking out of the top of the candle. It's not, breaking through this March 22nd high in the market, nothing like that. So we're inside candle. We're now inside IX10, multiple inside days. If we were using OCR analysis, we've got higher lows and lower highs. We're forming a compression here, say like a really tiny bear pennant at this point, like a micro bear pennant. So Google's probably the easiest one out of all of them. It needs to break out of yesterday's candle, up or down. Simple as that. If it breaks out, run it to the top of this March 27 high. And if it breaks down, then get to 100, but I'd be a little more cautious, get through 100, run it down to the bottom of this candle. Thursday, March 16th, be 96.20-ish. Big indecision day in AMD yesterday. TRB, we call this the recovery candle. Now we're getting the follow through candle. This is also set up really well for the strats pattern, machine gun reversal pivot or some thing like that. The idea behind it is if these people that were trading short were using stops, their stops would be above the days that they got in to go short. And now in the pre-market today, we've broken inside day breakout, trigger through those stops. Well, when you're short, your stop buys you out, right? It's buy to close. So it adds to the buying, pushes up into the next level of stop, which adds to the buying, pushes into the next level of stops, on and on and on, right? But it's a TRB setup. Yesterday was the recovery day. Today's the breakout day. And in one day, we can easily get right back up to the top. Just keep in mind, all that selling up here isn't done yet. We can see that it's not done yet, right? We haven't resolved through this level. So today, AMD could easily go to 102. But I would short that sucker when it got there. That is an indicator. You can search for it. It's called from open. And then I have the table at the bottom left. But you can put it at the top, at the bottom, all over the place. I just got it yesterday. I don't like how long it is. I want to squish it up and turn it into something that sits just right up here in the corner or right down here in the corner. But yeah, I like it. I got that yesterday. Yep. So AMD looks really good, and it fits into what we're already looking at with the semiconductors being up this morning. I like that TRB setup in AMD. So NVIDIA, it really didn't have that recovery candle, right? It had this graveyard doji, which I like that. And then the next day, I'd really rather have this green candle not have been a gapped up green candle. I really would have rather had it closer to the doji, because now we already have the breakover, and that was a pretty pathetic breakover. Like if we're looking at the TRB setup and the follow through, that sucks. That's not really good. Take it back to AMD. You see how we had yesterday primed us for today. And of course, I mean, we don't know how it's going to follow through yet. But we have like this little micro base, and we're primed for the follow through. It's like NVIDIA fired its shot early and wasted all its energy. Now, I don't know that for sure because we're gapped up again today, but we're already near the top of that range, and we're right up into that selling that has been here, and we don't see any indication that that selling is done. So it's very likely that NVIDIA is going to struggle with all of this, and it could just dump right back down again because it's in that sell zone. So that sucks. I would be watching for a short on this at 276. Just be very careful because this thing's been a monster. And just because there was some selling back here doesn't mean that we're not going to run through it today. And if we can get through it, it's done, right? If we can get, say, 278, We pass through that zone, then it's done. And when you zoom out like I'm doing now and kind of put it into context, this thing is a monster. I mean, look at that. It isn't done yet. So I would approach with caution if you're thinking of shorting this thing. And yes, that is a really big inverse head and shoulders, but if it took 2 months to build the head and shoulders, it could take 2 more months for the head and shoulders to play out. Like, we can't really keep that as a bias, right? If you look at the regular head and shoulders, it took months for that to play out. All right, so we still got the 10-year sitting inside that range. If we're going to see the S&P do something different, say stop this run to the upside or something like that, we're going to want to see a significant change in the 10-year. Something that would be concerning is if we break above Wednesday's high, that 3.6. If we get into like 3.7 or above, people way smarter than me are still calling for this to get below 3.3. So an inside day breakout to the downside would be a heads up or a catalyst. Remember, yields down, bonds up. So if we see 10-year breaking to the downside, we're going to keep our eye on the bonds and look for bonds to rally. There's a big change event going on from what we used to do last year into what we're doing right now. For a while, stocks and bonds were moving in the same direction. So when we would see bonds up, we'd see the S&P up. That dichotomy is changing right now. So if we start to see bonds up, we're going to have this expectation of the S&P going down. Until proven otherwise, and it doesn't have to be that way, that's going to be the bias that we hold. We see bonds moving up, we expect the S&P to go down. So with the idea of bonds moving up, and they are, kind of trying to get up this morning, look for a retest of this inside day breakout from yesterday, which it did in the overnight hours and came back in. Look for it to do that again, but actually keep it with a focus on 131 and then 132. That'd be a massive move in bonds to get up into 131.5. Even worse to get into 132. And I don't think the S&P would appreciate it that much. We'd be very likely getting back into yesterday's levels and possibly an inside day breakout to the downside if we were to see bonds make such a move. The VIX has now gotten down below 19, and we're working our way back up. There was a discussion about like I'll think of it a little bit like a bungee cord, right? When you jump with the bungee and you stretch it to its final limit, and then it flips you back in the other direction really fast. The VIX getting below 19 is a little bit like that bungee stretching to its limit, and that it's very likely going to flip now with this massive swing in the other direction. Well, we get VIX rising above 19 aggressively, we're very likely going to be seeing the S&P retrace at the very least that Globex run last night, and very likely back inside of yesterday's price. We've got our two main sectors that we have to have for a bullish day. They're both up. So right now there's nothing that suggests that we're not going to get a bullish day, which is why I'm looking for us to not get a bullish day. Remember, everybody else is looking up, I'm looking down. Everybody else is looking down, I'm looking up. It doesn't make me right all the time, but it works more often than not. So like a rail, this thing, if we use something like linear regression, start on Tuesday, that was 50% of last week's candle. We hit it on a dime, just turned and ran. We can double click on that thing and we can turn it into a channel. At least I thought we could. Maybe I got to do it with the menu there. Redraw as channel. I thought we. You can see the swing highs, swing lows. So it's been a real tight range holding that linear regression line. And I hate to say things like it's due a pullback of significance or anything like that. It shows that we're not overly extended from the 10. So it's not owing us a pullback. But I'm looking to short this thing today. So I want to see signals that the S&P is done, that we're losing it, that we're losing all that buying pressure and all of that under the surface push that we've been getting. It's going to be semiconductors. We got to lose those. And big tech. So like, I know there's names that aren't tech in there, but the FANGs, we got to lose those. And we got to lose finance. As like the sorriest dollar sign ever. Those are the three right now that are keeping everything afloat. We already lost KWeb, right? That one was on the table. It's not now. So that one's done. And then Bitcoin. We got to lose those. So right now we still have 4 out of these 5 still holding up the market. That doesn't inspire a short. But through the day, these are the ones that you're going to want to keep your eye on. See if they start falling off one at a time. Or, I mean, even better, they'll just all dump at once. That'd be a completely different kind of approach, but probably more of a shock system from one of these Fed speakers talking, right? Because there really isn't an econ event on deck today that could take these 4 out. So I'd say you're pretty much primed for the day, right? Keep your eye on those 4 parts of the market and look for any weakness. And as long as they stay strong, don't short this sucker. Just keep looking for opportunities to buy the dip. Short duration, because there is no long-term long here. We've got, no reason to suspect we're going to get above 4,200. And with it being at the end of the month, I expect next week to be a completely different world. Keep your eye on the fact that we're coming into earnings really soon. We're less than 2 weeks out from the start of a whole new earnings cycle, right? Banks kicked that off in the second week of April. So we're getting a new month. We're ending this, hopefully, this wishy-washy market state that is looking for direction, because they'll start getting direction from the earnings that we see, right? Banks will set the tone for the next quarter. Everybody, be careful, be safe, have a good day. I'll